But the whole concept is, why not try and squeeze into the first quarter what you did the entire year instead of setting a year-long goal? What now, if you got the goal, why not try and do it that first 12 weeks? I'm also reading Never Finished, David Goggins' new book. It's a kick in the ass. And I'm also reading a book written by a guy, and it's the story of Mike and David Landrum's dad, who in the 1960s was recruited by the FBI and spent 4 years infiltrating the Ku Klux Klan in Mississippi. And it's an incredible read how this guy put his life on the line for what he believed was right. And that's the way I feel about our job here in Primerica, maybe not to the same extent, but we do what's right 100% of the time, and it takes people who have guts. And I look at Canada right now, and we're getting our butts kicked by the UL gang. And I think a lot of it has to do with sometimes once we get comfortable financially, we lose sight of the crusade. And so I'm really trying to bring that back. We do what's right for people. People need us today more than ever. Any comments, Mark? What are you doing in the beginning of the year to kind of rally your team and rally yourself?
Well, those sound like some great books. One of the books that we're really promoting is Booking Appointments. And I think that's
I've heard of that book.
Yeah. One of the most important things that people need to have as part of their plan for the new year is I just believe, 10 new appointment entries every week in your book, and you're well on your way to making $100,000 a year if you're not making it now, or maybe adding another 100,000 to your income. But I agree with you. I think the crusade has never been more alive than it is today. I don't know if the company at large were talking enough about that. I know Art Williams used to say, never forget what blew your butt out of the water the first time you saw it, right? And there's certain things that I, to this day, still blows me out of the water. I'll never forget my first death claim. I'll never forget sitting down with a lady that I get her as a referral. She's lower income. She's a widow. She had been a widow since she was 20 years old. She had a daughter and 2 granddaughters living with her. And I'm scared to death going to the appointment because I didn't want to get rejection. And I'm doing my little flip chart presentation. I get to the whole life page and, do you have any policies that work like this? And she goes, I think so. And she comes back up with a Harding's grocery bag, which is a grocery store in our area, a grocery bag. And she sets it on the table, and the weight in it shifts and it falls over, and 39 life insurance policies fall out of that bag. And, those kind of things changed me forever. It changed the way I think about what I do. And, and the crusade has evolved over my career, right? The debt crusade, it's happening all over again. People are getting themselves back into debt up their eyeballs. Just the concept of showing somebody, you do an F&A for somebody, showing them how to do a debt stacking plan, it can change their life. It could totally put them on a different trajectory. And so I think we got to get back to, that original formula that Art Williams used to talk about, 50% crusade, 50% dream. I think we got to talk about that, talk about it often, whatever energy it takes for us to get back out in the field and get on appointments on a regular basis. And there's so many ways to do this business today. There's so many different, you can be working in a 50 and above market, right? I mean, to look for those assets. But there's a lot of young families out there that are struggling. We can still sit down with and we can still do the full job, sell them life insurance and get them an emergency fund and do all those things. So I think whatever it is that people find that resonates with them, the bottom line is they got to fill their appointment book every week. So,
yeah. How about you, Kurt?
What my goal is, we always try to load the front half of the year and have the most activity possible in the first half of the year, because that gives you, well, in my situation, it gives me more freedom in the second half of the year. But if you start out slow, it's really hard to ever catch up. Okay. So we are like without this appointment, without the MPI today, I have 8 appointments today besides
Wow.
MPI. Okay. So like we try to really load up the first part of the year like crazy. And then you feel good about what you're doing. You don't mind taking some time off because like, hey, I'm doing what I'm supposed to do. It's okay. I don't feel like a loser because I'm taking time off because I haven't been working. And I totally am on track with Mark too about the cause and the crusade. You know, having, you know, like Tuesday was great and I'm excited about more of that stuff coming up. But, you know, Art used to talk about, you know, when you have the competition on the ground and you're ahead by 3 or 4 touchdowns and it's a team you don't like, you go ahead and try to score another one. You know, you put your foot in their neck and you step on it, you grind it down a little bit and you don't let them up. And I think as a company, we miss that. We've gotten, you know, pretty and all that kind of stuff. And pretty is okay, but, you know, a smack in the face is good for the competition too at times.
Yeah, 100%. And they are listening. We're working hard to really bring the crusade back because, you know, last year in Canada, one of our competitors who just got their butt slapped by the regulator for selling UL the way they do, they have 4,000 agents. And last year they sold 28,000 UL policies. And we've got 10,500 agents and we sold 16,000. And but we're okay, and a lot of our guys are okay because they're making a lot of money in trails, and I'm like, well, the job's not done, you know, and the job doesn't get done when you get financially independent. I don't think the job gets done when the job is done, and that's why we got to really rally people around the crusade. So I'm loving where the company's going right now. They're listening to us on that. Ben, let's kick off MPI for 2023.
All right, buddy, appreciate it. And as we wait for Bill to kind of hop on here, I'm just going to go through a couple things, guys, kind of give you guys a review of 2022 and then kind of talk about what we expect in 2023. So here are the final stats. The S&P 500 finished down 19%. I think that's a really important thing to just know. Because again, new clients that maybe you brought them on a year ago, 18 months ago, and they don't follow the markets, what they think is that you're the problem, right? They know that they switched their account to you and it's down now, so it's because it's your fault, right? Obviously, we know that's not the case, but I think it's very, very important to help clients put things in perspective. So if the market was down 20 and they're down 10, that's good, right? Our job is to hopefully outperform the market in a good market, protect them better in a bad market as best that we can. But really highlighting, one of the things I always try to do in reviews is talk about different aspects of their portfolio in terms of why some things did well, some things didn't do well. I think it teaches them and reiterates the importance of asset allocation. The Dow was down 7, right? So we talked about that a lot last year, that dividends or large cap value really outperform the rest of the market. People want to get paid to stay invested. And I expect that to continue. I think tech in the short run, at least, heads lower. And I think large cap value outperforms again. I really do. NASDAQ ended up down 33%, right? If you guys remember prior to 2022, the headlines all the time were just talking about the FANG stocks and technology stocks. But obviously, again, asset allocation is important. Small cap down 21, international down 14, emerging markets down 19%. I will tell you that emerging markets is starting to look a little bit more undervalued. Doesn't mean that you need to overweight there, but it's just something to pay attention to. The 10-year Treasury finished down 16%, which is a crazy move in a short period of time for the 10-year. And again, we've talked about this a lot the last 6 months, but there's only been, I believe, 7 years where stocks and bonds both finished negative. Obviously, 2022 was one of them. 2022 was the first year in the history of the markets where bonds and stocks both finished down 10%. So your historical typical asset allocation where you're 60% stocks, 40% bonds. Unfortunately, the bonds in 2022 didn't help offset that short-term volatility or risk. Global bonds down 16, munis down 8.5. Now, one of the things that's happened, we talked about this the last MPI, but over the last 5 to 6 weeks, I do think we put a bottom in bonds, hopefully. And you're seeing munis really start to recover, which is good. I know we talked a lot about I bonds. We have several inflation type bond funds in the Primerica universe. One of the things I'm talking to my clients all the time about that bring up I bonds is the issue that you have is you can only buy up to $10,000 worth. The government wants to keep you locked in for 5 years. If you buy a fund, not only can you put a lot more than 10,000 in, but the main thing is the flexibility, right? If we get a bottom in 6 to 9 months and I want to reposition those I bonds into stocks that are on sale, I have the ability to do that. So that's a popular question that's coming from clients right now. Energy's up 66% in 2022. I do expect that to continue. A lot of disastrous energy policies that are leading to the supply and demand problems in the energy market. The other correlation that's important to talk about is we did have a really strong dollar in 2022. The last 2 months that's been reversing. So you're seeing gold, silver, and a lot of things that tend to be inversely related to the dollar and inversely correlated start to do really well. Gold and silver the last couple months are up quite a bit. I do expect that to continue. I do expect to see a really good year for gold and silver in 2023. Now, I talked I think a month ago about consumer sentiment and investor sentiment is close to historic lows. What does that mean? Obviously, from a bullish standpoint, from a contrarian standpoint, is you often see a bottom or a capitulation in consumer and investor sentiment before you see stocks bottom. So that it has happened the last several months. If we go back to 2008, what you saw is investor and consumer sentiment bottom in the summer. And then it wasn't until March of 2009 when the Dow was all the way down to 6,400 that we actually saw stocks bottom. So another bullish signal for you guys is looking at volatility in 2022. We had over 20 days where the S&P 500 was down over 2%. Historically, when you have, by the way, that happens less than 10% of the time. So again, help clients put things in perspective. How did they do the 10 years prior to 2022, right? But if you look at history, stocks return an average of 20% the year after a volatile year like 2022. And take it out 2 years, the average rate of return is 34%. So again, I'm not saying that we already put a bottom in. I'm not saying that it's right around the corner. But what I am saying is, from a technical standpoint, from a fundamental standpoint, both the consumer investor sentiment being really bad and volatility being really bad in 2022, in addition to what markets tend to do after the midterms, you do have a setup where we're going to have a recovery at some point. I think it's going to be a major bounce. And of course, our challenge is keeping people invested, keeping people informed, having people stick to their convictions and their discipline and their strategy, rather than, of course, react short term to a bunch of noise. Okay. Again, what do the markets tell us in the last couple weeks? I think the market's overly concerned about inflation. I'm not saying it's not rightfully so. But what you saw in the last week or so is everybody's really paid attention to what's the Fed going to do. So the Fed's come out and telegraphed that we're going to do everything we can to get inflation to come down. So I think you will see a correlation between interest rates and inflation and really what we see stocks do. because of course, at some point, when they stop hiking interest rates and stop increasing rates, obviously, it should help us put a bottom in sooner, right? So from a technical standpoint, half of U.S. traded stocks are above their 200-day moving average or long-term trend. The other half are below. So it's right now, in my opinion, a tremendous fight between the bulls and the bears to see who's going to win out in the short run. I do expect value to outperform in 2023 that I talked about, and it seems to me that we already have a rate hike priced in here for the end of January. So we talked a lot about the last 6 to 9 to 12 months. As interest rates go, stocks will probably go in terms of what's going to happen. Again, I do expect energy to continue to outperform. I don't think that rally's done. You're seeing the dollar start to shrink back, which again has a correlation to stocks, commodities, etc. What will happen with the 10-year? I'd like to see that continue to stabilize and come down. I think that's good for equities. I think that's good for the economy. I think it's good for the mortgage industry. It's better for the real estate market. Again, when we see a stock market bottom, and some people think we already put a bottom in, some people think that we could have a good start to the year that followed a downturn. Time will tell, right? Nobody knows. My personal view is, again, do your own research. I don't think you guys should take anything that I say as gospel. You should do your own research. But my conviction is that we'll probably see lower equity prices in the short run, followed by a big bounce on the other side. Okay. These questions, I don't read Telegram much because it turns out to be one of those very large group texts that you want to get out of as quick as possible. But I just noticed a few questions, right? So people are asking about real estate. Listen, those of you that run into a client that all they do is have rental properties, or they do flips, or they do real estate, obviously criticizing them or saying to them that they're going about it the wrong way is really, really stupid, right? There's a lot of money to be made in real estate. And you just have to be careful. I think you lose your credibility if you bash what people are having success in just because it doesn't benefit you, right? You want them to invest. I would focus on having way more appointments than worrying about how do I convince the person that's done really well in real estate to not do real estate. I don't think that makes any sense. I mean, Warren Buffett has said 1 million times, don't invest in things that you don't understand. So somebody that's made a lot of money in real estate has done really well with it. They understand the leverage of it, right? I don't waste time. Trying to convince them not to do that. I just don't, right? Now, could they maybe incorporate more liquidity? Sure. Could they maybe think about being more diversified? Sure. I do think we put a top in real estate in terms of the top about 4 months ago. We are starting to see prices go down. I think you're going to see a further correction in the next 12 to 18 months, in my opinion. The increase in interest rates undoubtedly has a huge impact on the real estate market because people can afford less house, right? So again, I always want to compliment what people are doing. And it's all about credibility. Oftentimes I've gotten the most referrals and the best referrals from the client that I never did business with, because they know I'm out there and I'm an advisor and I'm a consultant. I'm not a salesperson. If you're trying to convince people of things, your issue is you don't have enough appointments. And that gets me to my next point. I get often asked, right, all the time, how do I get better at this business? What do I study? What do I learn? And guys, this is the truth. I mean, I read a lot. I try to stay humble. But the reality is the reason I got fairly good at the business is not because of how much I read. Certainly it has nothing to do with my personality. Certainly has nothing to do with my intelligence. It has everything to do with the fact that I just went on more appointments, okay? It's exhausting for people to hear people that want to know everything about everything before they do anything. That's not the way the business works, right? I just outworked most people for a couple years, and I went on more appointments than most people for a couple years. And here's what happens. If you schedule a ton of appointments, you're going to get really good, and it's going to force you to get out of your comfort zone and get better. Because if you run into somebody that has, they've worked really hard, it's their life savings, and you're like, man, I can't screw this up. Guess what's going to happen? You're going to study, you're going to get better. You're going to examine all the options and the strategies and the portfolios, and you're going to get better because someone's relying on you. I don't think you're ever going to get good when nothing's on the line. I just don't. I grew up playing sports, and I played my best when the game was on the line, whether I was pitching or I was at the plate. I just, you get in that zone, and it's the same way in business, right? So stop studying everything about everything before you do anything, and just set up way more appointments. I mean, that's the key. And honestly, if you guys study, so everybody's like, I want to just meet with only people that have $1 million. And Ben talks about all the time about 60 and older. So all I'm going to do is focus on that market. And what happens is people want to get more out of less, which is fine. But if you study the numbers, right, it's not that the Howard Laschers of the world don't come across people that have a couple million. But I promise you, and I talked to one of my RVPs about this recently, but it's more about doing a lot of 70, 80, $100,000 rollovers, right? And at the end of the year, it adds up to, I had a really bad year, in my opinion, because, I didn't work really hard, but I think I did 26 million or whatever in my base. If I go back and do the math on the average case was probably 80 grand. So some of you are wasting a stupid amount of time worrying about coming across $1 million rather than just doing a bunch of $80,000 rollovers that add up to a really, really, really good securities business. And I think heading into 2023, I really think that with this wall of wealth, we're in a position that if you're getting out of bed and doing 8, 10, 12 plus meetings a week, you're going to get to the point where you're doing $1 million a week. And that's not pie in the sky. It's just, again, that's just the market that we're in if you're working. So I would just encourage you to do way more appointments, and you're going to find a lot more volume. It doesn't mean that you don't assess what type of market that you're in. It doesn't mean that you don't get better referrals. But I think you're just going to find more volume because you're seeing more people and you're in front of more people. So Bill, are you on, buddy? Yeah, we got him. Cool,
Yes,
man.
I am.
So just to introduce you guys to Bill, I think he's one of the best that we have in the company in terms of doing a really good job of taking care of people. I know him, reasonably well because we're in the same hierarchy under Coker, but just watching his family, high integrity, does the right thing. And I think 37 years, right? About to head over $500,000 in income. Doing a great job taking care of his client base. He just took his entire family to Hawaii, all the grandkids as well. So being able to enjoy some of it, which is so cool to hear that, I think that puts in perspective why we work hard, right? But Bill, man, we appreciate you hopping on and looking forward to everybody learning from you, buddy.
You can hear me, right? Got it. Okay. Hey, I appreciate the opportunity to even be on. I mean, I'm always honored when we're talking majorly high integrity, high, incredible people on this call. So I appreciate the opportunity when we see this, but a little bit about my story. We both grew up on dairy farms. We have 4 kids. We agreed that when we had kids, Shar was going to be staying at home with the kids. So she did. I worked at a sheet metal factory here in Rochester, Minnesota. And so I was always working extra jobs to make enough money to pay the bills. We were living check to check. We weren't bad, but we weren't going anyplace. And at age 31, fall of '85, I met a guy at a school breakfast, and we got together a couple weeks later, and we were the perfect person for Lee to run into, because we had 8 whole life policies. We knew nothing about, and we had bond safe for the kids a little bit there. We had just our bank accounts, like I said, 8 whole life policies. But I always believed we were going to retire early. So it took us 11 years to save $3,000 by the time we see Primerica. And I was skeptical, but we sat down. I thank God that we listened, because I was, like I said, I was skeptical. But after about a half an hour, I was like, this is amazing. I'm actually understanding this stuff. It's making sense. The first time. And then he came back a week later and showed how instead of having $35,000 on me, the primary breadwinner, to bury me and raise 4 kids, Shai would have been broke, out of the house, on welfare in a matter of a year, and we could have had $300,000 on me. And after we seen that, and I did all the reading, I read back then the Common Sense book. I did a bunch of other research, and a couple weeks we did business. I called the Better Business Bureau. It was for real. A couple weeks later, he invites us to a Super Saturday. I'm curious to learn more. Not only I want to see if they say the same things as he was saying, but and they did. And then I remember calling my agent, and this is where you go back to the crusade. When I called my agent on a Sunday night and asked him about a half a dozen questions, he wouldn't answer a single question because he knew I found out. And I got off that call and I thought, we have 4 little kids running around our table. These people always said what we had, that was the best, knowing that if I died, the family was screwed. And that's when I planted my flag and said, I will raise Cain the rest of my life. I never ever thought I'd do this. My goal was to build a welding machine shop. And I didn't know if I was going to like this, but we got to tell other people. And you're right, Brad. Our job is never done. You know, could I retire? Could a lot of us retire on this call? Yeah, probably. We're debt-free, financially independent. But if I have the goodies to liberate other people, shame on me if I just sit down and give up, right? So anyway, that's our story. We worked at part-time literally for 12 years while coaching the kids in their sports and busy at church. It was crazy schedules, but in that 12 years, it took us 11 years to save 3, but 12 years later, we had $250,000 and we were debt free. And so January 1998, 25 years ago, Coach Coker said, hey, quit your job, promote you to RVP. So we did. And 6 months later, we went over 50, which was better than the best year in the plant as an engineer. 18 months later, went over 100K. We went over 400K, 12/31 of 21. Our goal was this last December to go over 5. That we didn't quite make that. So we will get that done. But it's changed our life. It's changed our kids' lives, because the word vacation was not in our vocabulary in the past. It was called trips to relatives, okay, because we could eat their food. And they're great people. We developed great relationships. But the bottom line is we didn't have the money to do those things. But since then, as we've saved, we've worked really, really hard at practicing the principles that we teach. 2 reasons. 1, we wanted to win. And 2, we always felt that if I'm teaching anybody else, I should be practicing what I'm teaching. And because nobody can call your bluff then. Nobody. You don't have to be financially independent. Just be practicing what we're teaching. And so it works. I look at every one of our kids now that grew up. They were 1.5 to 11 when we seen Primerica. And today they're 38 to 46, I believe it is. They all 4 have 3 kids each. So we got 12 grandkids within 15 minutes of our house. But every one of our kids, our 2 daughters work in the Mayo Clinic system. Our 1 son works there. But they're practicing. They're doing great things. Our net worth at age 30 was probably, I don't even know, 25,000. Their net worth today is someplace between 450 and 800,000. That's impact on our families and what we're going to be able to do for our future kids. But the money is incredible. but because of the exposure to Primerica and reading leadership books and some of the books that you guys talked about earlier, reading those books, getting in a positive environment changed who we are and how we think and walk and talk. But it also created an environment for our kids to grow up in that environment and who they become in the process. And Jason, our youngest son, is an RVP. Both boys are licensed, but Jason's an RVP, wears a ring. And when he trains, I'm taking notes because I've got to get better. I mean, he's like, his communication skills are incredible. But so that's a little bit about where we come from, but it really was the crusade that got us into the business. If somebody goes, well, how much money can I make here? I had no clue. I knew I would get paid by helping other people. That was a motivation, but it was a crusade that we had got taken advantage for many years, and we could share that. And if we could make extra money doing that, hallelujah, that was cool. And so that's what we did. So that's a little bit about our story. You know, as the business changed since we started, I think we've all seen dramatic changes from paper applications and logs and file cabinets and all that stuff to thank God where we're at today with the technology, which I love that aspect of it, right? But I also believe because we make such great money doing what we're doing, we as a company compared to in the late 80s, early 90s, I believe a lot of us have become soft. We've lost, a lot of people have lost the crusade. I think a lot of young people coming on board have no clue how devastating cash value life insurance is, because only about 15 to 17% of the time we're in a replacement mode. And so I think, you know, they're chasing a cash flow operation here versus a crusade driven business. So we got to teach that and get them in front of more people so they experience it, right? What would I do different starting over? You know, starting new people today, I want them to get fully licensed, get that managed account license as quickly as possible, and then get them out in the field. Like Ben said, how do you get better? Doing more. It's not a secret. Kurt, you went out and set up 1,000, 1,200 accounts. Well, how did you get good at that? You did it. I don't consider myself any better than anybody else, but most of the time I just plain do more than the other people. That's why I make more money than them. It's not that because I'm like somebody special, I don't believe, right? But building a team, I'll be honest, I've never built a lot of people. We got 3 RVPs we've, had in the cocoon or in the atmosphere that have popped out. But I've not been a building machine, to be honest. Okay. We've wrote a lot of securities and we've built our income. But so, another question here is what does your follow-up system with your clients look like? We do have office staff. I learned that from Kurt Poole. You can't be doing it all. If you're a surgeon, you don't do all the preliminary work prior to it and after it. You do the surgery. If we're good at that, that's what we need to be doing. And so we do have Nissa in the office here. She does a great job. Shar ran it. My wife ran it for a lot of years. But over the last 3 years, we've transitioned to where Nissa runs the office, makes phone calls, takes care of all my paperwork, that and follow up, that type of thing. But as far as system to follow up with clients, we've really, at this point, we used to send out letters and then follow up. At this point, we've broken down a list of everybody that's at least over 50 grand in income with us, or not income, but assets. And we break that down in a monthly list divided by 12. And we get on the phone, we send emails, that type of stuff. Some people will start to catch up with technology and set appointments over the internet, but most of them we got to follow up with. And I know if I stir the pot, there's money out there. If I have 195 million under management, I know I only have probably 40% of what these people have. I'm not foolish enough to think I have everybody's money, right? But then Nissa follows up. She prepares the documents for me for the appointment so that I don't have to run all those things like I used to. Okay. Where do we see the business headed? I think I think, we're a little over right around 50% of the income paid by Primerica is securities right now. Personally, with the amount of assets out there, I believe we're looking at 75% eventually. Maybe, I don't know, right? But there's a boatload of money out there with 17 or whatever it is $1 trillion sitting in banks doing nothing and sitting with the competition. Man, there's a lot of business. I remember running all over, and I'm sure you guys have seen the same thing. We used to run all over the place for a $25 pack and be excited and make $3 or $5 in a year's time. But we were developing clients and we were helping them get on track to where they were going. But the importance of doing all those crazy things, because there wasn't big money dollar in the late 80s, the importance of doing all those packs and developing all those clients is today my main business is not, I have some, but not chasing the 20, 25, 30-year-old and getting them going. That's for my son and their team to do, but it's taking care of the 1,900 accounts that I have out there, taking care of them and doing a good job of that. So that's where my business really is. I feel we're all sitting on gold mines, and most of the time the people don't mine the gold. Drives me crazy. I mean, I got a guy in my office got 3 to 5 million under management, clients that are 80 years old and have 100% of their money in a growth fund and hasn't visited them in 10 years. That's a sin. That person could get hurt, right? And so they're sitting on money, yet they're going out and driving a school bus to make extra money. Drives me crazy, that type of stuff, right? But I do believe we're right now we're at about 95 million personal throughout the hierarchy, 145, 150 million. A breakdown of assets. I got 18 million in annuities, approximately about 17 million in managed accounts. So my goal over the next 12 to 18 months is to move that 17 million up to 60 million. Because I don't believe we're doing a good job, but we're not doing the best job. And so I believe we move that moves our income from $500,000 to $750,000 and doing a better job for the client. So we're working on that. We're working on my head to improve that. Okay. But we can change that. And I believe my goal is by the convention is to break 1 million. We got to get on that Ruby list. Okay. But we got to have a whole lot of my help and the team's help and God's help in that picture. Okay. Because that's a serious move. But I believe it's possible. Any specific favorite questions for clients, but I do love asking, what are your goals, especially retirees? What are your goals, your hobbies, things you'd like to do that you haven't been able to do? And they need coaching because my experience is in the retirement phase, as the people are getting closer, the last year to 5 years prior to that, they've never been in that next chapter. The fear there. So I find that half of retirement, half of the process is how much money do they have? Do they know their expenses? What are their incomes going to be? Can we support all that picture? That's half of it. The other half is the emotions that you and I are helping them through. Okay. I always picture putting water wings on the kids. If you remember when our kids were small, you put these little water wings on their arms so they wouldn't drown. And I always tell the client, my job is to help you. I'm going to take you by the hand. We're going to walk out on this diving board together because we're going to get through it. I know what the other side looks like. You don't. And they're afraid to cut that umbilical cord because they've never been there. And geez, do I have enough? Don't I? I don't know that stuff. And so I love helping them through that process. Anyway, that I love that flow of it. But there's few people out there that don't have any, and we have any goals, hobbies, and we got to help them with that because if you remember down in Florida, whatever it is, 10, 12 years ago, this gerontologist was speaking, saying that the 5 key elements to longevity was, do I have staying engaged, proper diet, proper exercise, a positive attitude, and a financial plan. That was the keys to longevity. And I talk to everybody about that because we got to help them through that process because they've never been there. And we're giving them value in that scene also, right? How do you recommend for people to get more appointments? Get involved, treat people right, get off your butt, go talk to people, ask, right? The answer is no unless we ask. I was more of an introvert growing up. So for me to go on appointments in the beginning, man, alive. But I do know that what we do, I think by you and I practicing what we're teaching and we're saving money and we got a game plan to get out of debt, we got a game plan to get to where we want to go. It's a little bit easier teaching because you're practicing it. If we're not doing anything, it's pretty hard to sell someone on anything if we're not doing it. Right? The compound, the long-term compounding effects of building a client base, it's huge. I know people in many Zooms I've done over the last 2.5 years, I think they're looking for magic. There is no magic. It's planting seeds, planting seeds, planting seeds, planting seeds, planting seeds. And what a good bunch of us on here that are having success in the securities arena, we planted a lot of seeds for a lot of years. I've been planting seeds for 37 years. And we've been harvesting big time in the last 5 to 10 years. And that's going to get greater. So the advantage of that, of why the compounding of building a client base, we're impacting a lot of lives for generations. And now I've got clients passing away. And we got to move those assets either to the kids or siblings or whatever it might be. And that's going to attract more assets because those people have rollovers and other people they know. So it's everything, client relationships. And every business I talk to, the key is client relationships, building relationships. They got to like you and trust you. And if they do, another one of the questions was about referrals. I still get referrals, but I get way more coming into me than me going after. Because Kurt, I know you'll get calls daily. Hey, so-and-so said, hey, you need to talk to me. Da, 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 da. I have that probably 3 to 5 times a month. People say, hey, so-and-so said I need to talk to you. And that's where our business is at. Thank you, Lord. I mean, we've moved it to that point. We've done a good job. We've provided value because most people don't have those coaches to help them through the process, right? Do you think already saw the stock market bottom? God only knows. I believe back in September, I think it was early October, I remember telling people I believe we're at the bottom because we were down about 8,000 points at that point. When I had several clients call in one day panicking and freaking out, like, oh my God, pull all the money, pull it all. I'll put it in back after the election. Okay, that's real smart. Okay, we're going to pull out the bottom and we'll put it back in when I think it's good. But to me, it was more of a gut thing that when people are at their most pessimistic point, we've got to be really close. And I know from my experiences, I didn't get a lot of calls through the spring and summer, few here and there. But I believe a lot of times when they call, they're calling to see if I have left town or jumped out a window. And when I actually answer, they're like, wow, okay, so what are you doing? I said, well, back in May, I bought on May 12th, 13th, 17th, 28th, because I was buying some of our funds at a 28 or 40% discount. They're good portfolios. Why would I not jump in and buy things on sale? And they thought that was amazing. The other thing, God only knows on the market bottoming, I think it's going to be volatile. I do believe if we're not at bottom, we're very close to it. But I take these negative times as positives, man. During COVID, I did it again in the spring. When the markets are down, I'm calling people that are packing money into their Roth or into their regular IRAs. And the younger they are, even the better. as that's a positive to me. Here's a great time to be doing a Roth conversion and flipping that money over. Yes, my account's worth less. When I left the plant 25 years ago, I had 55 grand in my 401k. I rolled that over into, actually at that time, I wanted to own more city stock. So I flipped it into city stock. That following October, if you remember, in 98, the market went down for about 2 weeks. My stock went from 50 grand or 55 grand, dropped to 30. Now, most people would have freaked out. I went, yes. And I flipped that whole 30 into my Roth and then wrote it up. And the beauty of 98, you could spread the taxes out over 4 years. That was the first year of the Roth, right? So I look at that as a positive time because I'm going to pay tax on less. I still own and moved the same amount of shares, but I moved a ton more money in the big picture, right? So anyway, that's a value I believe we can bring to the table for people. Do I like retail annuities managed? Yep, I do. I love the retail because it allows us to get kids in at 10 years old and get them started saving money. A lot of young people. Okay. We can get people in. We've got a great lineup of mutual funds. They're great portfolios if they stick with it. Okay. I believe there's a place for annuities. Personally, I mean, I've got, like I said, about 18 million, I think, in annuities. That's a mix of index and variable. Personally, I haven't marketed a variable annuity in probably 5 years. I'll use the fixed if Mayo Clinic here, they love their pension and they work very hard to keep people's pensions in the pensions, keeping the dollars there versus annuitized where they know if you die, they keep it. Okay. But I like AIG's indexed annuity using a balanced index, whether it's S&P, Merrill Lynch, whatever, because it mirrors that pension very close as far as, hey, it can't go backwards. You got a guaranteed income, but the beauty of the pension, but the beauty of the annuity, I can grow their income if we have growth in the balanced index, and they still own the money. God forbid somebody dies, and no fees going in. So it mirrors that, and so I won't use that on all their money because I always believe you got to have a bunch outside. So we'll do a mix of dollars to be, and if they're not 65 yet, I don't kick it in right away with income. We'll draw down on some of their other money. Then we'll kick in their annuity and stop their others and let it grow. So we want options there, right? And the managed accounts, I love that arena. How do I market it? I lay both retail and managed out. I own both. I love both. But I believe for the people getting closer to retirement, I believe we need to hedge risk. And the SMAs allow us to do that, hedging the risk. And but is it for everybody? I let them make that decision. I lay the cards on the table and let them make that decision, and then go from there. But a couple of the other things I always feel I bring to the table for bringing value to people is to make sure that any non-qualified accounts we've got pay on, transfer on death, to make sure we have that, to make sure we got the beneficiaries, the contingents in there. The other thing is to to give them the knowledge to go to your bank and make sure you got pay on death on those accounts. So all of that stuff bypasses probate. Okay. In the last 10 years, Minnesota changed to where you could have TOD, transfer on death, on our property. So now